Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. A reminder that the show is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030, or on the website at realestate360live.com. That's realestate360live.com. And the best place to go is on the right-hand side. There's the Ask a Question button. Just put in your name and email address and the best phone number to reach you guys on, and we'll be glad to get back with you. It's time for this week's Market Movers. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. If you go to HomeGain.com today, you can see what I'm talking about. All you have to do is type in your home address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today at HomeGain.com. So as far as what's going on in the markets this week, obviously much of the talk, as we discussed earlier, is still about the fiscal cliff. That's dominating pretty much every thought and every word that's coming out of people's mouths. There are some other key data points this week, though. It's the employment week with the November employment data, which is due out on Friday. In the meantime, we have the November ISM Manufacturing Index. The Wednesday is the ISM Services Sector Index. And you mix in a couple other reports of data, which will probably get plenty of attention. But like I said, the fiscal cliff is going to be the primary focus. Depending upon where talks go, we might see, the stock market fluctuate up or down and mortgage interest rates fluctuate up or down. Probably not very much, though. I mean, as we've seen in the last few weeks, it's maybe been an eighth up, an eighth down, an eighth up. I pretty much think that's going to hold pretty true here. The 10-year note has pretty much been at that 1.6, around that 1.6 level for a while now. And I don't really feel like interest rates have much room to come down. More room for them to tick up a little bit than they do to come down further. So, you guys are, once again, sitting around thinking interest rates are going to go into the 2.5% range. I don't think it's going to happen. I think that we've kind of settled into this range right now. So you would expect to see that average, that Freddie Mac average that they put out there around that 3.3% to hold pretty true, depending upon, your credit qualifications, obviously, and your loan to value. If you're looking, to find out if a refinance makes sense for you, please reach out to me at 877-245-2030. That's 877-245-2030.
And Ryan, I got a quick point on interest rates. On the fiscal cliff, let's say talks break off. Well, that means that all the automatic cuts will come into play. That would actually help keep interest rates low because it would send a signal to the market that the U.S. is reducing its deficit and that its currency would kind of take a boost because of that. What's dangerous to interest rates and what could cause them to go up is if Congress and the President come to some grand bargain that doesn't reduce the deficit, continues the spending, throws more money on top, more printed money on top of it, that could lead to a lack of confidence in foreign buyers, and also with the rating agencies, they may downgrade the United States if the United States does reach such a bargain, and that could cause interest rates to rise.
Yes, it could. And, typically, Louis, I would say that's exactly what would happen. But with the Fed's manipulation, I don't know, like in a situation that they did, come up with a great plan, right, that's probably going to allow the stock market to rally, which would typically mean that mortgage interest rates would get worse in that scenario, right? But I could see it would actually be a situation right now where the stock market would get better and mortgage interest rates would stay low. So I'm just completely puzzled because you used to be able to look at some key, indicators and say one way or the other what would happen. But I do feel like, yes, in that situation that they don't come up with a plan, I think that everything could just break loose, you know what I mean? And it could just be not a very good situation for anybody. I don't think that it's going to get that far, but yes, there's so much more room for interest rates to move up than it is for them to continue to come down. So
it needs to be an event.
A major event.
Yes.
A major
when
event.
When it happens, though, it's probably irreversible.
Yeah, I would agree with you, because the swing, the momentum that tends to take interest rates up or down, it tends to be pretty violent one way or the other. Especially on upswings, when interest rates are coming down, it's a little bit slower, and you're going to see that over if you look at historical charts.
They were manipulated down, but when they go up, it's a direct result of the market having been repressed for so long. Deficits don't matter to the market until they matter. And at that point, that's when they could start to rise.
Yeah, and I feel, long-term interest rates are definitely going to rise. I just don't have that definitive time period as to what long-term is at this point, just because everything seems like it's so touchy day to day. But I would assume that mortgage interest rates are probably going to stay, in this range up to around 4% for probably the next year, barring some major event from happening.
They'd like them to be there, and they'll do everything they can for them to be there, except they cannot protect against a force majeure. I mean, if something dramatic happens in the market, then all bets are off in their ability to control the market.
Yeah, and, so some people are out there trying to time the market right now, and they're saying to themselves, well, I'm banking on something major happening. Is that going to put me in a better position to potentially buy real estate? And my answer would be probably not. I would say that you should probably, consider locking in your interest rates now ahead of some sort of potential event happening.
Well, any event happening most likely will just raise your interest rate.
Absolutely, and I think that, it's
not going to lower them.
When interest rates are low for such an extended period of time, it becomes sort of the thing that everybody's just like, oh, well, they're never going to go up. You know what I mean? They have to stay low, and that's just not the case. They don't have to stay low. And I think people get very comfortable in the fact that there is such lows that they can hold off on purchasing for years down the road. Now, I understand many people are in situations where you're upside down. We basically know that 1 in 3 homeowners is still upside down on their mortgage. Now, in the D.C. metro area, it's turning a little bit now to where people are getting into equity positions where they can potentially sell their home and not have to come to the table with any money, which is great. It's saying that, our real estate market is a little bit healthier here in the D.C. metro area. And out on the West Coast, I'm not sure, Louis, but I would imagine you're probably having something similar happen out on the West Coast there. That you're seeing a lot of properties start to gain a lot of their equity back. Much of it has to do with the low interest rate environment and a shortage of homes in certain locations. Obviously, like
area, that's correct.
Yeah, like San Francisco and D.C. I mean, there's desirable areas, so you're going to see prices rise a lot more quickly there, especially with the low interest rate environment. In the outside areas, the urban and rural areas, they might not, once you hit certain price ranges above $400,000, they're probably not moving as quickly. But the bottom line is, guys, is that if you're considering, I still advocate reaching out to a professional, whether it's me or somebody else, to look at your options now. It doesn't mean you have to do anything now, but at least know what they are, and know, okay, what is a potential mortgage payment? Can I afford that payment? What, how much of a down payment is it going to take? What credit scores is it going to require me? I mean, it's not just one of those things now that you can just say, I want to buy a house. I think I'm going to buy a house today, so I'm going to go ahead and start looking online and go ahead and purchase. I wish it was that simple. And 5-6 years ago it was. Anybody could just pick up the phone and all of a sudden they're getting a mortgage 30 days later. But now it's not like that at all. People are getting very frustrated because they're getting denied. I mean, I would say, probably close to 50% of people that are applying for purchase mortgages are not making it to the end, not making it to the table and getting the keys to their home. And I think that it starts with, preparing in advance and understanding, what exactly is needed these days, because it's not the same. It's a different world out there. And like I said, you need to be arming yourself with professionals that understand the market and that can, point you in the right direction to get you where you want to go and make sure that it happens. Me personally, there's nothing more frustrating than somebody that gets really amped up, really wants to buy a home, and then all of a sudden, you get halfway through and there's something that pops up that could have been avoided that then doesn't let them get a home, okay? A lot of this stuff is preventable. It is, but it starts with, not going about it on your own, because there's so many intricacies to the mortgage and real estate world now that one little small misstep can be really cost you the home of your dreams or your first home. Louis, you guys have a service that, consumers can come to your website and anonymously search for agents, which I think is a great place for people to start, because they can start to ask the questions. You know what I mean? Where do I start? What do I do? Do I contact a lender? And most agents that know what they're doing can start giving them good advice. I mean, wouldn't you think that that's a good place to start?
You have to start with a qualified professional, or you have to either have gone through the process yourself or done an enormous amount of research. And even if you know what you're doing, you don't have the finger on the pulse of the market, most likely, in the area in which you're buying the home. So absolutely, always talking to a qualified realtor, talking to lenders, making sure you know what you're doing, you understand what you're getting yourself into, you know the market, or you know the markets through your real estate agent. If you're selling a home, you need their assistance on how to price the home, how to get it ready for sale. There's so much that a realtor does that you really are shortchanging yourself if you can go out and do it on your own.
Yeah, and I mean, many people, they always, as sellers especially, they might start with, I just want to know what the approximate value of my current home is, and where should I start? And obviously, they can go to HomeGain and they can get a valuation there. But then,
a computer-generated estimate, which really is almost meaningless, because it doesn't mean that's what your house is going to sell for. It's only based on the comparables in the area, and it doesn't take into account all the special features that you may have in your house. You can try to add those to the HomeGain calculator with a what-if feature. It still doesn't get you the price that you're going to need to go to the market with.
Yeah, and I mean, what they can do to further find out that value is to, A, hire an experienced appraiser who will actually give them a value for that home, or B, contact a local real estate agent in the area who can prepare a customized market analysis of the homes based upon the recent sales in the neighborhood, which, if you decide to get both, then that's great too. But, reach out to a professional. You can go to HomeGain, or, you can just look online and find a local professional. However you wish to do it, you can reach out to me at 877-245-2030. We're coming up on a break, guys. When we come back, we're going to give you the credit tip of the week. Stay right there.